Welcome back to the world of investing. So today I'm going to talk about something I briefly touched on last episode with Buddy, my guest. And that's investing versus gambling. So I want to make it clear: investing is a calculated risk versus gambling and betting, which is definitely too risky, in my opinion, for it to actually be classified as investing. So to start off, I've talked about what investing is a lot in the previous episodes, but I just want to let's talk about it again and highlight that, like I just said, it's a calculated risk, but more so when looking at the long term, that's the way to invest intelligently. And when looking at gambling, it's more of a short term objective. People look at it as like an easy way to make money, and obviously there really is no easy way. So I mean that should be a red flag immediately. Um, I mean, a similarity between the two. Obviously, you wanna minimize risk and maximize profits, but like I just said, with gambling, it's very risky. And also in gambling, for example, sports betting, there are different odds to certain bets you place, and obviously that's a way to minimize and maximize risk. But again, it's short term, and there really is no easy way. Anything can happen. Um, for example, like again in sports betting, the underdog wins. Whereas with investing, um, in the stock market and these indexes, Dow Jones, S&P, um, you choose this company and over time you generate a return, and there's a good chance you will do so because when looking at the stock market, you're expected to actually make money over the long run. Whereas with gambling, the house, that's what people call it, the runners of the gambling site, they have the advantage and have the edge over you. And I guess this gambling and betting industry, they want you to lose. That's their intention. That's how their industry makes money. Um, to further touch on that, and also to talk about what I talked about in the last episode, in the very end, with gambling. Um, so there's this interview with Neil deGrasse Tyson, and he was talking about casinos and how they make money in that industry. Um, so it's basically based around the errors of statistics and probability of humans, which is exploited. An example at a casino game is roulette. So say you want to bet the number 7 because people say it's due because it hasn't been rolled previous times, and it hasn't been rolled in a long time, so people think they're bound to land a number 7, but that's actually not true at all. This is just like the failure of the human brain to actually interpret probability, and the casino exploits this. Another example would be it's kind of a fun example, would be rolling a dice like gently for a low number and then hard for a high number. That's clearly just not how probability and statistics works. It's just not registered by the human brain, and that just highlights how the house always has the edge and they want you to lose, and they exploit human tendencies. And also like in casinos, there is a way to increase your odds, and for example, in casinos, for not purely random things like your roulette, there's blackjack, for example. People can count cards, and that's basically where you can tilt the odds in your favor a little bit and be systematic. And the people who actually recognize the probability of this actually get kicked out. It's not allowed at casinos. And that like once again shows you how they don't want you on purpose or even accidentally to recognize the statistics behind gambling, because the odds definitely are not in your favor. So after just touching on this and what Neil deGrasse Tyson was talking about, it's just a reiteration of the purely random games and probability that we fail to recognize. So I guess just getting back into the investing aspect of gambling versus investing. Um, Investors have more sources of information than gamblers do. You have the ability to research thoroughly which company you want to invest in and not make an immediate decision, um, like gamblers do with that short term desired gain. Um, Over time, like I said before, the odds will be in your favor as an investor and not in your favor as a gambler. Um, Once again, I'm referring back to the last episode. Um, and actually, Neil deGrasse Tyson, too. He was talking about how if you hit a jackpot or something for a certain game, then this is from his past experience. What did the casino do? They offered him alcohol, and that was just to mess with his brain function and try to have him not realize the probability and what's going on with statistics and how unlikely it was for him to get a jackpot again and just for him to spend more and more money for him to lose. So to get back to the research aspect of investing, before you do it, you want to analyze the companies you want to invest in and research compared to gambling, where you just look at the odds and bet on them. Typically, you don't spend hours, days, months researching a certain team to bet on before you gamble. And in gambling, like you can bet on futures. For example, if you think that a team's going to win the championship and you bet that at the beginning of the year, it's possible. But that's not really a good example of long term because it's a single bet and you can't generate a return throughout the whole season. It's just one single bet that takes place at the end of the year, and you just you decrease the odds, which increases the possible return you get. When looking at the stock market, it obviously comes with risks too. For example, if you're looking for a more short-term approach, that's kind of highlighted in the media and everything, how people do day trading and stuff to make a lot of money, but really that's mainstream media, and it's not really representative of how the stock market actually works and how people invest their money. For example, if the market drops suddenly, which could obviously happen in the span of a day, then that's the risk that you take, and you could lose all your money, basically. So once again, long term is a better option. Also, like with the stock market, movement in stock prices, exchange rates, the prices of commodities, the rise and fall of interest rates, inflation, and there's much more. Recently, with the drastic inflation of the U.S. economy, and the looming recession, obviously that's a factor regarding investments in the stock market, because you don't want to invest and then immediately lose all your money. But once again, even with these sorts of things, over many years, even if this sort of thing does happen, the U.S. economy will likely rebuild, and it's very probable that you will get a positive return on your money, or on your investment, rather. With investing, you're able to put your money in different types of investments by diversifying your portfolio, and I guess mitigate the risks of putting money into your account. And even if you're buying risky stocks, you can basically kind of offset that by putting your money into safer options at the same time. You can also make more informed decisions when investing. Like the opposite with gambling, you're pretty limited and what you can research and understand before risking your money. Gambling, just game a chance, and there's no analysis beforehand. There are professional gamblers, and they, I guess, can choose to play games that increase their chances of winning, but still, that's very limited. With the stock market, there's historical data that you can base your decisions on. You can see how the stock market's performed in, I guess, like past couple months, and then make a projection of how it'll perform in the future based on a certain company. And also analyzing risk and the likelihood of your investment actually making a return. There's a reason that there's financial advisor with investing, and there's not the sort of occupation with gambling, because those who invest, these advisors know that you want to handle your money with some risk, but also safety. And with betting, that's not the case whatsoever. It's more of a leisurely activity and for entertainment purposes, and it definitely should not be a way to generate a significant amount of money over the long term if you're planning on doing so, or if you're planning on having that be your main source of income. Briefly, I'm going to go back to the resources part with investing. And with these financial advisors, they can help you achieve your goals and help you build your portfolio that you're going to diversify, hopefully. They know what specific investments can be successful, and also how to hedge your investment in a risky stock with bonds or commodities. And this is a much safer way to risk your money with hopes of success. Gambling is appealing because of this short-term gain, and you get the results pretty instantly. Which is basically the opposite of the stock market. You have to be patient and keep your money in the account. Be patient. Trust that the stock market will provide you with this return, because historically that's what has occurred. And these are tips for investing, strategies to investing. Whereas with gambling, there's really not strategy. You just choose a team or play a game, and it's very high percent luck. Going back to counting cards, but that's for example, not games purely based on probability, and it's only if you know how to do so, and it's not allowed in casinos. Alright, so to wrap up this episode, I'm just gonna go over the key takeaways. So investing and gambling, they both involve risk, but obviously investing is less riskier than the latter. Lastly, in investing, over time, the odds will most definitely be in your favor. With gambling, that's not the case. Alright, this wraps up the episode. Thank you for watching.